connected to the YouTubes. And here we go. Into the YouTube. And we're live. We're back again with another fascinating technical analysis report featuring GPISA, JFDI, and your eloquent host, the Holding Bags. Greetings, gentlemen.
Greetings. How you doing? I am on the road today, so I may be in and out, guys, but I'm traveling back from Canada, and I was having a little bit of FOMO in our little chat conversation. So I've
Canada, barely knew her.
But looking forward to this week. So
GP. Hi Nick. Hi JFDI. Hello.
Hey. Hey, I'm here.
How are you?
I'm good. Doing well.
So last week you two, it was the depressing bear show.
Oh.
And what did the market do? Just kicked your ass higher.
Rip everyone.
Not until Friday at like 3 p.m.
Does that matter? Does it matter when?
Of course it does.
No, it doesn't.
It's a stick safe for wasn't great, right? So,
I'm not going to be the one arguing the bull point tonight.
No.
So feel free to be on Team Bear.
No, I'm actually Team Bull, but my conversation has for the last few weeks has been like, does it really matter when everything's down 50%? Yeah, great. The Q's held. Fantastic.
Well, the point
your
was
position's down by 40%.
you two were depressing, and I was thinking of just retiring from life and going off grid and never to be spoken from again and have twice as long of a beard as that Nick has. Nick has a really long beard. So yeah, and the market said no bags. We're going higher regardless of what these clowns on this podcast says.
Yep.
So we come to today.
No doubt about that.
We come to today. All right. This is we're getting to the point. We come to today. A follow-through day, if you will. Yes. Right? But on really low volume.
Was it follow-through day today?
Was it? I mean, it today pushed up. The Qs were up 0.5%.
Yeah, but what was the advance?
If you go from the low to the high, it was up 1.5%. No,
I'm curious on what the advance and declining issues were. Right, were we closer to an 80% follow-through day?
The advance and decline. Not quite at 80% now. NASDAQ actually sold.
Okay, I think it was like 70.
NASDAQ actually had more decliners than advancers.
Yeah, so follow-through day when the bond market is closed. I need to see it when everyone's participating. Me?
It was extremely low volume for such a move.
Yeah. And so the bond market and how it reacts will be interesting tomorrow. I can see that the futures are not super red, so that's always a good sign. There is earnings coming up. There's a lot of catalysts coming up to kind of keep things at bay. I don't know why it always seems to be like the week before earnings season, this craziness of people being nonsensical and not just coming to peaceful terms. Right before earnings season, it just seems to happen. I think Ukraine war was the Russia-Ukraine war was right in the earnings season. So,
Nick, what do you think? Do you think it was follow through, or do you think it was just aberration?
I mean, I would have almost argued that Friday was the follow through day.
Oh,
At least just looking at the cues, because it sort of looked like the cues held that range, that mid
Yep.
350s to 380 range, and on the short term it was kind of like a little bit of a double bottom where we broke out above 362.70. I would have argued I would have liked to have seen heavier volume today too. But I mean, based on Friday's action, I'm pretty happy with it. The spies, I don't like the spy or the IWM as much as I like the Qs, but time will tell.
I think the follow through day definition is what matters, right? Like, are we just talking about, hey, we saw a reversal and we saw more buyer follow through? Yes, we have that.
yeah.
happen.
I'm just
like, the
saying it
technical-
was a consecutive up day.
Yeah.
Yeah, but there's like a technical indicator that has a U-vol day, like an up volume day of 90% or more, and there's this entire formula that goes with U-vol and D-vol, and then the follow through day. And I believe today was the first actual opportunity to have a follow through day. So, but it has to be with certain percentages of advancers and decliners. The stuff I'll check when I get home or tomorrow morning or whatever. But
Well, that technical definition of follow through day, I'm pretty sure it's not going to fall within that definition.
yeah, it might be. I haven't looked at any.
I'm pretty sure it won't. You
Yeah.
can look. You feel free to look. Do what you want on your own time, but I'm pretty sure it's not. So that leads me to be even more bearish bags. Dun dun dun.
Am I gonna have to walk you off that ledge?
Yep.
Okay, I don't plan to though.
Yep.
There's no point. Like I said,
We're going the 10 year is just going to keep marching higher. Oil is going to go to 100. There's no good reason that the market won't break down here.
So
I mean, we have
apparently
CPI and
follow through there,
PPI
by
and
the
new
way.
Speaker of the House and all this stuff coming this week. Earnings season starts. Yeah, it's lower from here.
Yeah, I still think there's going to be one final panic set low. Yeah, panic wash this week potentially on CPI or escalation of war, and then we start to move a little bit higher. But right, because if you're looking at the individual action in a lot of names, they're getting to pivots or like it could be whatever pivot. Whoever the written algorithm is following. Whether it's prior high of day or prior week high or prior week low, it's literally getting to these points and turning and flipping the other way, right? Like, so until we start taking out some of these either short-term pivots or longer-term pivot moves and then accelerating to the upside, it just feels like we're ping-ponging between short covering and not short covering.
I mean, there's a lot of uncertainty out there, so yeah, it seems like there's to be a lot of uncertainty. I think the individual names, especially amongst like big cap, though, I think they all are like pretty much sitting in kind of gift territory, whether they break out of their actual like Apple and Microsoft, for instance. I was kind of like, putzing through those charts. Both of them like pretty symmetrical looking descending wedges, like right into the 200-day. Netflix put in that 3-week tight, like right off the 200-day. There's a lot of potential. It's just whether or not we can follow through. Obviously, the strongest of all the names today was cybersecurity, which has been. I mean, there've been so many eyes, at least on my Twitter stream, on the cybersecurity space, and all of those, basically broke out between Friday and today. And
so a rug pull's coming there.
What's that?
So a rug pull is coming in there. Feels like every time there's eyes on anything, there comes a rug pull, right?
Yeah, no doubt about it. Like, I mean, Palo Alto is right under all-time highs, and that's the only one that really didn't see kind of like breaking out of its I don't know, intermediate range.
Yeah.
But I don't know.
Of the mega caps,
Yeah.
Meta,
Oh my
Meta
God, it
looks-
looks so
Meta
fucking
has
good.
just been absolute curb
The
stomping
strength on the
everybody who
monthly,
gets
yeah.
short.
Yeah, I kind of thought the same thing. I was like, when we look back at this monthly chart, like a year from now, 6 months from now, it's gonna look like this tiny little blip of a high and tight flag.
Yeah. And people are gonna be like, why didn't I get long there?
Yeah, for
Because you were
sure.
too worried about macro.
Yeah,
And the only FANG stock, only mega cap stock, only stock above, I think, in the tech space above like that 100 billion mark that actually put in a green month, I believe. Right? Like it
yeah.
in September when everything got sold into oblivion, Meta put in a green month. And now it's following through on top of that. So you're like, okay, well, that relative strength is showing up continuously now.
Google back to all-time highs.
What do you think?
Oh,
it's
sorry,
gonna...
not all-time highs, recent highs. I was looking at the
52-week
weekly,
highs.
not the daily. There we go. That's better. It looks like it wants to roll over. NVIDIA's got a nice head and shoulders.
Is this the facetious bag or is this the
I mean, the chart's
I don't
on
even
the
know which
screen.
day.
It's a freaking head and shoulders.
I mean,
uh
I disagree.
Is that a weekly?
I think it reclaimed
The daily.
its neckline. Oh, actually, hold on.
Yeah, it's a head and shoulders.
Yeah, I don't know. I would have. It hasn't even formed the right shoulder yet. So how are you considering it a head and shoulders?
What do you mean? It is forming it right now.
It's got to get back up to like mid 470s for me to get into your camp that it's
It only has to reach 470. It doesn't have to reach mid 470s.
Sure. Okay.
This is going to take out all-time highs when people realize that earnings for Nvidia weren't a fraud and they're going to accelerate.
Let's put
quarter.
it in more comprehensive terms, Nick. It needs less than 3% to form the right shoulder.
Sure. Even so, long term, I think it's just buying time for that 200 data catch up. Like Apple, for instance, to switch from
trapped under the 50 weekly or the 50 daily.
Yeah, like it
trapped under the 20 weekly. Trapped below the range that it was in for the better part of a year and a half.
But you got to talk about Netflix here a little bit, just slightly. It's down 120 points. I don't disagree.
It lost the downside
showing,
of its channel, and now it's trying to support has become resistance.
But it's also leading up to the upside. It went. I think it was one of the first to go green on Friday. It remained green for like 99% of the day today. Except for the open, immediately went green, went red, and then stayed green for the rest of the day. So the character change on Netflix is noticeable. It could just be a little bounce into earnings and they destroy it for 30% into earnings. I'm not saying that's not possible, but the noticeable thing is something that's been weak for 15, 16, 18 straight trading days is now showing
I'm going to blow it up really big on the screen. I don't know if you can see it, but failed the 20-day.
Okay.
Failed.
If it closed at highs today?
No, it didn't.
Yeah. Oh my God. It was off by like, let's see here. What?
It got smacked at the 20-day.
387.
It got smacked at the 20-day. I don't know. Maybe I'm living in a different world here, but
20 EMEA or SMA?
SMA.
Yeah.
Did it even touch it? Because I don't even see it touching it.
No, it failed it. It couldn't even get to it. Look,
no, that means
I'm blowing. If you can see on your screen on your phone,
I can see it on my own. Like on my own chart.
There's the candle.
Right, but it didn't even test it. That's what I'm trying to say.
It didn't have enough oomph to get there.
That would
On
be
day
your,
two.
what was that? What was the one chart that we looked at, that one that I was calling out? Was it
I want to look at
LRCF?
XLE and look at that major power gap up on huge volume.
Yeah, that was it looks like an island bottom off the 200-day there.
Yeah, it does.
Yeah.
Oil is going higher. The 10-year treasury is going higher. Sell your stocks.
Can you tell me why oil popped less on war than on OPEC cuts?
Randy, that's not funny. I didn't kick my kids today. Okay. Ha ha ha. Randy's in here throwing salt. Hey, you guys were the ones who brought out bearish bags last week. You got me to this place, and now you guys are backing off of it that you're mega bulls. I'm not buying it.
No, but we talked
mega
about it last
bullish.
week. If we reclaim the weekly 21 SMA, you had that week to do it.
I'm not mega bullish, he says.
I'm saying that there's a lot of potential out there. A lot.
Yeah, to go down.
Oh my God. If we
This guy's just being a wet blanket to be a wet
Dude,
blanket.
you are a wet blanket tonight.
Dude, I'm just telling you
Jesus.
what we have done this for going on 2 years. Well, 2 years in January. All right. So 22 months of this shit from us. And I think I've called it how I saw it the whole time. So here we are. Here we are. Bearish bags. You want me to pull up the 10-year? You want to pull up the 10-year?
Do it.
There you go. No, that's not the 10-year.
Am I going to have to fake a bad reception and get off this call?
Probably.
Too depressing, bags. Too depressing. Now I know what last week felt like.
Why am I not getting my 10-year chart up here? There we go. There we go.
That looks like a tweezer top.
No, it doesn't, because those aren't together. Are you looking at the daily or the weekly?
Monthly.
Oh, the monthly. Let's change what we're looking at. Well, we'll see at the end of this month. We'll see and see if that's correct. If it is a tweezer top, it could be.
Yeah. You know me. We always start with the largest time frame first.
Let's look at Dixie.
Is that the monthly?
Looks like it's big old rounded bottom there.
It looks like it's failing the breakout.
No, it looks like it's consolidating the move above the range.
That looks like a rounding top right there. What do you think?
Just like it did right here.
That looks like the Batman.
Well, if it is the Batman, then it's going to go up to 113, which is another.
No, not good. Not good.
Yeah, not good.
That starts breaking things if you get to 113.
If it does a Batman, it's got another 7% higher to go. Okay.
I think I'm going to draw my Batman slightly different than yours.
Yeah, that's the wrong Batman. It's the wrong Batman.
It's the original Batman, Adam West. None of that Christopher Nolan crap.
You know, well, this could be a whole podcast on which Batman's the best. But what other chart you want me to pull up, Nick, to prove that how bearish we are?
I mean, the
only thing that looked good today was cybersecurity, and the reason why that looks good today is because the word security.
Sure. I mean, if big cap tech runs, it's going to lead the indices higher.
Hey, I'm the guy who just wrote a newsletter on Sunday saying how it's still good to be in mega cap tech and classics are the where you need to be.
Yeah, totally.
Right. But that was before today's price action on low volume.
What about Tesla? Because Tesla looks fantastic.
I mean,
yeah, let's talk about Tesla too. Looks like a bear flag.
That gap down was still bought. And considering the news that we had over the weekend, People were planning for fucking Armageddon today.
Yeah, didn't they also have like a miss on China delivery numbers on top of the? They came in like 10% light. So you had
looks like
China.
a bear flag. It looks like a bear flag. Yeah.
Tesla looks like a bear flag?
Yeah.
Your famous day.
Hold on, let me throw some fibs on it. I think you're wrong.
Hey, I'm the one who chose Tesla for my stock pick. Do you think I'm just going to shit all over my own pick for shits and gigs? For S and G's, as the kids say?
You know, it's another one that looks pretty decent is MDB.
MongoDB. Yeah, I do like MongoDB. And
Upstart is another one. Reclaim the 20-day.
It looks like a bear flag. Yeah.
Upstart.
We've already retraced.
No, I'm just
50%
making up little catchy ditties now. I'm all about the sing along.
It finally reclaimed the 20-day after like 3-4 weeks, 5 weeks or something like that.
Yeah, I do not agree Tesla, and I'm not in your camp in Tesla. We've retraced more than 50% of like this most recent leg down. And that's kind of where my line is at. If we fell below 255, 250, if we probably take out that 250, I might agree with you.
In the immortal words of the algorithm Duzio, watch.
Yeah, for sure.
Just watch.
So I think for as long as I've been bearish on Square and PayPal, those finally look like they are ready to go. Maybe it's only 10% or 20% higher, but they look like they're at least ready to stop dying. So that's another signal that maybe we've found some interim positioning that we can be long to the upside.
CarMax. I mean, I might even get long CarMax. It's looking so good.
So I'm guessing you're out of your short.
No, I'm still up like 140%.
Okay.
I'm out of most of my profit. Like, yeah, I've taken a lot of profit, but yeah, I'm still letting it ride.
Yeah.
I've got my stop set at 110%. And if that clicks, then I'll just take my money and just move right along. No, I'm not going to get long CarMax. I think they might go to zero. And I think I'm going to get more than 200% left out of what I have on. So there you go.
No. You know, it's another one that started to look good a couple of weeks ago, and it's starting to follow through. I think we've talked about it last week or the week before. Palantir.
Yes, yeah. Palantir. That is a defensive stock and a cybersecurity play. Looks awesome.
Yeah.
Let's look at Lockheed Martin. Whoa,
day, didn't it?
Power gap.
Yeah.
My dude JFDI would say, fuck yeah.
Let's fucking go. Yeah. Stop in the gap. Throw a stop at 420 and let it go.
This gets rejected.
At the 200 day, you think?
Probably. It is a lot of volume. It is kind of showing kind of a bottom, but there's a lot of technical damage on here that it could push higher, but ultimately needs to probably come back and retest this.
Yeah, when there's not a whether the daily, the weekly, when there's not like an outright pattern, and you're taking an entry based on like a specific candle setup, it's almost you just got to take it day by day because your thesis isn't backed by the general direction.
Yeah, it's, you know what it is? We talked about it a few times. It's the warning shot. You have been warned that, so like like LMT has that. It's been straight down for a couple of months now. Here's your warning shot. Bulls are back. They may get faded, but they're back to fight. And so, like, this kind of candle is the kind of candles you want to see in names that are gotten destroyed, like Square and PayPal as well. Like the bulls showing up in heavy volume on these types of gaps, even if they get filled in the short term. This is the warning shot that we're ready to change direction.
I was
Yeah.
wanting to buy some ASML, but it still looks like hot garbage.
Yeah.
Sorry, I just completely swerved us there, but
No, that's fine.
I was getting some flack for what I have in the watch list. And I was like, I can't believe you still have Andrew. So I can't believe you have all the ARCs on your watch list. Well, it's an ETF watch list, bro. So I was going to my watch list, and yeah, ASML's been toward the top, and yeah, I'm not feeling it. Not feeling it at all. Not
Interesting.
feeling
So are
it.
yoga pants more popular in lore or chips?
Lulu looks pretty good
at
at
that.
Yeah, Lulu's going. I may as well start shorting Lulu. That looks like dog shit too.
Man. I think it pulled right into the 200 day. Looked pretty good.
Yeah, that's where
Had a
you're
nice
on.
engulfer on Friday and then followed through today.
The 9, the
I think-
21, and the 50 daily are all rolling over. The 9 is serving as current resistance. On the weekly, it is trapped below the 9 and the 20, and the 9 has rolled over. And after this week, the 20 will likely roll over. So I wouldn't say that's a great setup, but do you, baby boy?
I would argue that it held the 40 week. The 40 week and the 30 week are both pointed up. The 10 week is flatlined, and when a stock's in a range, the moving averages are. I don't really care about the short term moving averages.
All right.
When stock's in a range.
Do you want to make a friendly bet?
On Lulu?
Yep.
Not particularly.
All right.
I already picked fucking Fastly, and the thing's
Yeah, I
taking an
know.
absolute mess. You know, like what? No, I don't want to make a side wager.
Okay. I mean, I used to make bets with, people on stock twits. Like, all right, if this happens, then I'll buy you one share of F-Cell and you buy me one share of like some cannabis company. It's like a penny stock. So we can make a friendly wager sometime if you want to, Nick. But I understand not wanting to stick by your conviction on Lulu, because
I mean, it's not like I have. It's not like I'm like all in on Lulu here. I just think that it looks good.
Okay. Target still looks
it's
like
gone.
a big old horse's ass.
Are you still long?
I haven't been long Target since like the 200s. Like, I got out of that quick.
Okay.
Yeah. No, if I was still long, like I wouldn't be retired and I wouldn't be doing this podcast.
No, well, I just remember you were very upset with me when
that was a long time ago. That was
Yes.
somewhere through here.
when it was going to 130, right?
Yeah, this was
90 eventually.
This was sometime in the winter of the early part of this year. So that's been many moons ago.
Yes. Okay. So I wasn't sure if you'd stayed long, but yes.
No. I'm not going to ride a losing horse that long. We got a question on coin. Do we like coin?
If it ever moves.
Do we like coin? I mean, that's a great question. I think it's kind of loaded since I'm the bear on the dais here.
Your risk is the
actually,
okay, yeah. So you
coin
just
looks better than a lot of these charts that these two yahoos are trying to get you to buy.
I'm not trying to get any. This is not financial advice. First of all, this is for educational purposes only. And
100% not.
We're talking. What were we going about? Coin.
We're talking about coin.
Your risk is the 200 day. If you're buying it here, you're risking 10 points, basically.
The 200 days at 69.
167.07.
67. So
I'd probably use the 70 mark in general because that's been
Yeah.
crazy
Yep.
support for a long
Yep. That's
while
the
versus the
range.
200 day.
Yeah.
Yeah.
So do you,
It needs to break out, right? It's just going sideways. So
I
you can
like
trade
this
the
chart
range.
better than a lot of the other ones we've looked at so far.
where do you think we're heading into end of the year?
Probably closer to 0 than 400.
Closer to 0.
That is such an odd. What? That doesn't even make sense.
What do you mean?
On the spot.
Closer to 0.
We're
Than
talking
400.
about the Qs, or are we talking about SPY?
Pick one.
Because I'm usually talking about the Qs.
Okay.
So we're at 366.56 right now. And I said
Yes.
closer to 0 than 400. So that would mean somewhere below 200, right? If my math is right.
Yes.
You think
Now
what?
he's just trolling people, so I'm gonna stop listening.
Oh, this is so much fun for me.
Yeah.
No, I think Nick, I think the next couple, this is my honest assessment. This is not me bullshitting like the closer to 0 than 400 bit. I think it really matters what happens as we come into this pink trend line that I got drawn right here.
Yeah, for sure.
Either we push through that, or we are probably going back down to sort of, we're going down to this 330 level, probably 335.
The 200 day. Sure. Yeah.
The Adam and Eve bottom it's on the NASDAQ. It has held that level back to back weeks, I think 3 weeks straight. 13,181, I believe, is that number on the NASDAQ, which is a composite of 2,500 companies publicly, 55% which are technology, and 45% of which are everything else in the market. So it's a pretty decent composite list. And that's still showing that Adam and Eve breakout retest. So if we launch out of this kind of 4-month consolidation, it's the bias is to the upside. And so far this year, this year has been seasonality is going to come, and then seasonality comes. So until we see a change, the contrarian view doesn't seem to be working.
Do you know what month is historically the best month?
November.
April.
You awake?
Is it really?
It is.
No, it's not.
Yes, it is.
Is that like in the
You
farmer's
know what the
almanac
worst
or
month
something?
is historically?
Fucking, is it November?
September.
In September, yeah, that doesn't surprise me.
So I think we have a lot of time to chop and try to test this, and we can get through that line. Like it can happen. And this is the God's honest truth. I've been a little bit I don't know. I've been a little bit full of shit. I'm not this bearish, but I am cautious right now because you do have all these factors, whether it's the data this week or the war or $100 oil or the dollar keeps getting stronger and the US 10-year, that keep me, again, like we've always said, trading the market you have, not the one you want. And I've been very clear that I want the market higher for as long as we've done this podcast. But as we have a day like today, which was a pretty good up move, again, 1.5% on the Qs from low to high is a pretty good day. I want to see the real follow through of breaking through this downtrend line that we're currently in. And when we do that, then I'll be more bullish. But until then, I mean, we're only, what is that? We're less than 2% away from breaking out of that. So Bulls got to step up. Bulls got to prove it that they got it. If not, we can go sideways and we can even dip. And it would not surprise me in the least. I'm not calling for this, but it would not surprise me if we came in sort of around that 200 day, around 332. I've got my line here at 335 after a week or two, 330, the 200 day is going to be right around that level. And
I don't think they're going to give that to you. I don't think they're going to give it to us.
I'm not saying they are going to give it to us.
Yeah, I know.
But I would not be surprised to see something like that happen, given all the uncertainty in the world right now at this moment.
Yeah, that's the pivot from what, August 2022, right?
Yeah.
It would make sense if it did touch that.
I'm just being rational. I've trimmed a lot of position. I'm sitting on a lot of cash.
Dry powder.
I put some to work. I hope we break out, and I'll put more to work. But I'm okay right now watching and not trying to overtrade because I don't have high conviction in a lot of the setups.
Yeah, that's
that's kind of what the conclusion we came to last week as well, was like,
the
setups are there. Follow your strategy. Hopefully a lot of trail stops got hit as, various moving averages and trend lines broke. Have your alerts set, have your setups, keep your watch list curated, and let the RS guide you. And that's what we got today in the cybersecurity space.
We did. Cybersecurity is we've been talking about cyber now for months, it seems like, and they're finally really popping. I mean, CrowdStrike had a pretty good move today. Zscaler had a pretty good move today. I think Palo Alto's next.
Yeah.
It's at the top of its range. But again, I love the bug. The bug actually didn't have as good of move as as those leaders did. But if you're, you don't know what to pick like me, I'll take an ETF.
So
that's a really good point, Nick, though, right? Like you're starting to see the things that we've been talking about for a few months, relative strength starting to push higher, right? So I think the bias should lean to the upside for the most part, because things that have shown relative strength are starting to push up, right? The cybersecurity, we talked about XLC too, right? The comm sector. And yes, we know that XLC is mostly Google and Meta, but they look good. They look like they're about to start their next leg up, right? So if the relative strength is now starting to see continuous relative strength and breaking to the upside, the bias should lean to the bullish, even though you're quite cautious about where things are currently.
Yeah, I mean, if the trend is up, right, on the SPYs, the Qs, I go to the Qs. The trend is up and it's been up all year. The odds definitely are stacked on the trend continuing unless we see otherwise. And certainly if, the Qs break under that, let's just say 355, 350. So I would be much more, again, why I would be more leaning towards the trend resuming to the upside than resolving to the downside, especially considering how well the Qs have held relative to the SPY, and the SPY is already sitting at the 200 day. The IWM's right at the low end of its range. Logical places where you would imagine at least a bounce or rally attempt.
And IWM is holding above the 2020 breakaway gap, right? Still, after the amount of selling that's gone on in small caps.
Yes, it's still holding.
It's still, which is phenomenal for how rapid that TNX rise was over the last couple of months. Interest rates destroy small caps before they do mega caps and big caps. So to see all of that and still manage to hold above the breakaway gap is also more kind of building blocks to things are building up for the bullish momentum, whether it's earnings that spark it, whether it's the end of all this fighting war-wise, the Fed cuts. I don't know what's going to be the conversation, but you're starting to see relative strength across lots of stuff, right? And then I think XLF is holding pretty well too, above that kind of consolidation area. So there's things that are showing up to say, well, buyers are stepping in. Are they stepping in and getting things to break out? No, not yet. We need more clear macro signals. We don't have those yet. So we could potentially stagnate and rotate between levels for another 6 months like this, or 12 months, or whatever it is.
Yeah. Say not to switch gears. When we spoke this morning, I didn't know, or we didn't know if you were going to hop on today.
Yep.
Don't have to do it tonight, but I was gonna just kind of share like a really kind of simple
Yeah, go for it,
day
Nick. Share.
trading strategy if you guys are interested.
Yeah.
Share it. Throw it up there.
So way back when, I used to follow a guy named Michael Parnas, and he wrote a book called The Power of Gaps, I think it was called, actually. But the entire strategy is more or less based on the first 60-minute range of the day. The only reason I bring this up is kind of, you can use it as a way to day trade, just for the sake of day trading, or let's say, you have longer term positions on and you want to hedge, trade around positions, add to positions, whatnot. So basically, how you look at this is, for instance, this morning, right? We had this major gap down, and there's a few rules to kind of pay attention to. Let's say that we gapped down and ripped higher and filled this gap within the first 60 minutes. It's a sign of strength. And the assumption there should then be that it's going to be more of a trend melt up kind of day. And vice versa on the, to the short side as well. So let's say price gapped up and fills that gap within the first 60 minutes. That's kind of the direction of the day, kind of like a trend melt down. When the gap doesn't get filled in that first 60 minutes, then that gap should look almost more like resistance than anything. Obviously, in this case, it didn't play out that way, but your entry would have basically been on this bar right here, and you were kind of confirmed over in here. It's a way of kind of picking a direction for the day, and at least for me, it helps me not get chopped up, because that first 60 minutes, there's a lot of volatility typically, and on the more aggressive side, you have a major gap down or gap up that gaps right into support or resistance. Obviously, you could be more aggressive than waiting for that first 60 minutes. But I was talking about Tesla this morning, and it was the same thing. And this is kind of what I tweeted. And right when I tweeted, I said shorts were about to get trapped. And the reason I said that was because it put in this first 60-minute range, and it started to pick the direction. So you definitely would have been short, if you were a short-sided trader. You would have been short, on this break through the lows. But once price closed back above that 60-minute range, that was where I basically said shorts are about to get trapped, because price was back in the range. As soon as price climbs back in the range, the very first assumption I'm going to have is price is going to gravitate towards the high end of the range. Not necessarily saying that it's going to completely reverse and break higher, but at the very least, it's going to come back and kind of test this high.
Well, if you were short, you were screwed by that second doji, right? It gave you two opportunities.
It gave you two opportunities to cover. Yeah, right there. So you definitely, you would have been covering at a loss or on a more aggressive side, you would have been flipping your position for a trade to get back up into here. Obviously on this candle, if you were long and didn't take anything off here, you were probably adding into this candle with the idea or underlying thought that this gap is going to get filled. That's kind of really all I had to say about it. Was just the first 60-minute range is largely important to me, and it's what I pay attention to on an intraday basis. It saved me a significant amount of money over the years. You know, you get like a major gap, and a lot of times it might just stay within that range. And like, unless you're, you know, selling the highs, buying the lows, selling the highs, and want to trade a range, I'm not very skilled at that, but you know, some people are. I don't know, something to pay attention to, and I just thought I would share it. I didn't know, you know, what we were going to be covering all tonight, and so I thought
I do something similar in the first 30 minutes, Nick.
30 minutes.
I use the 5 and the 3 minute candles to watch that first 30 minutes, and I'll mark that high and low range. And once I see it either come into it and fail, I would take, you know, the opposite. You know, if it were, you know, resistance or support, I would take the opposite if it couldn't break through. If it does break through, I'll wait for that confirmation and then just follow the trend the rest of the way.
Yeah.
Randy brought up a really good point, that usually you can see some trend change during lunchtime. And I think any of us who've traded for a while have seen the lunchtime sort of swoon or boom. Mostly it's lower volume. And that's one reason why I love being out of my trades in the 10 o'clock hour. I'm out by 11 at the latest, because if the trade's not going your way by 11 o'clock, it's probably not going your way, especially on options.
To that point, that they're like, put the FOMO aside. If you miss a breakout, wait for that on a swing basis. Like if you're a swing trader and you miss a breakout on any given name, don't fucking chase it. Just wait for the lunch hour pull in.
Yeah.
And there you go. I mean, obviously it's not always going to work, but especially on like a crazy strong day.
Nick, I think they call it the ORB, right? ORB 15, ORB 30, ORB 60. Sure. But people use ORB not just on intraday timeframes. People also use it on daily and weekly timeframes, right? I think we talked about it from a pivot high, pivot low perspective. But the opening range can actually be you can use that across all time frames, right? If you want to be a swing trader,
sure,
you do dailies or weeklies. And so you can actually use ORB not just for intraday, but it actually applies to all time frames. Because if
I'm a degenerate GP,
you go to NVDA.
I know.
I was using this as an example where you had this nice range in NVDA, and it failed. It popped back in the range. It tried to rally out of it, put in a lower high. As soon as that happened, I immediately thought it's going to gravitate back towards the low end of the range, which it ultimately did. So yeah, I'm totally in agreement with you.
I think a lot of times people think it's only limited to the opening range of the intraday, but people use it on daily. I think a lot of like other strategies out there, like ICT and the strat are similar versions of this, right? The two up, two down, but it's all about pivots, right? And it's all about opening ranges. So you don't have to stop at 60 too. Like if you're someone who works full time and only can glance at markets every so often, then you can also do like the 2 hour, like the 120 minute ORB. So depending on your thirst for volatility is the size of the range you use, right? So if you're a degenerate like Bags, then 1 to 3 minute ORBs are perfect.
Yeah.
I'm only saying what you just said, Bags.
I just put in the chat. At least I know I'm a degenerate. Some people won't admit it, right? Like it's a dirty word. Like, no, I know taking risks on options trades, and fortunate for me, they've worked out more times than not, but they can go against you. I mean, I made a pretty dumb trade on Friday. I didn't think it was dumb at the time, but look, hindsight's always 2020. I thought that there might be a quick chance to scalp some puts on Friday, and the market said nope. So instead of me getting out with a 10 or 20% gainer, I had to walk away minus 35. And that happens. You gotta be willing to cut the trade when it's a loser and walk away from it. That's part of maturing as a trader, is being able to accept the loss and live to fight another day.
So I have a question for both of you.
Yeah.
So can we go back to the Tesla chart and look at the last 5 to 6 days? Right? Can you help me break down what the hell this price action is?
Lower low,
because higher highs. I mean, lower highs and higher lows, right?
Yeah.
But what is this? What is this gap down? Bring it all the way back up. Gap down. Bring it all the way back up. Gap down. Bring it all the way back up. It's not. It's obviously more apparent the last 3 or 4 days. But if you look further back, it seems to be the case, and it's like, help me decipher what you would think this price action represents. Short term. Besides the WTF pattern.
An indecisive market.
Yeah, so I'd go to the weekly. I'm sorry, not the weekly. I'd go to the daily, and I think it's putting in an ascending triangle. Let's just pull
Okay.
that up. So I have my, let's say 1, 2, 3, 4. And this is my 5th touch or 5th wave. I look for 5 waves in any given pattern, whether it's a descending triangle, ascending triangle, descending wedge.
Yeah, sorry. The Braves said my bad.
If that 5th touch doesn't, if the 5th touch doesn't do it, as in like if price doesn't break out of here after that 5th, then I pretty much leave the name alone, because I'm in the camp then that it just needs more time and it's going to continue to be range bound.
Okay. So when the intraday charts looks like a piece of crap, go to the daily, right?
Oh yeah.
I was just trying to understand, like we were talking about the intraday time frame. So I'm like, what is this intraday action? And I think Bags just said it perfectly, which is it's just indecisiveness.
Yeah.
People are like, I'm gonna be long. No, I'm gonna be short. I'm gonna be long. I'm gonna be short. I'm gonna be long.
I mean, that's what range bound action is.
Yeah.
I think it's both indecision and largely institutions putting in a floor somewhere. They're accumulating. Institutions and big time traders are not buying breakouts. They're the ones that are putting in the floor and buying, supporting the name on any given like price level. Right?
Yeah,
like,
of course.
Like
they're not chasing. They're
yeah,
they're selling to you while you're chasing.
for sure.
Not you, Nick, but
That or
I mean, like the markets.
Yeah. I mean, like, it's not me and my neighbor that's buying down here with enough money to work to push this leg higher, or down here. They need this. Like, this is I don't know. I that's just kind of how I look at it. Bags.
Sorry, the Braves took the lead in the bottom of the 8th, and I'm trying to catch my breath. I was screaming and yelling. So I don't know what the fuck y'all were talking about for the last 5 minutes, because we have been trailing the game the entire time, and we finally got a 2-run homer. So yeah, there you go.
Yeah, I mean, you zoom out, zoom in, you can kind of just go back and forth and kind of pick it apart. That's how I would be looking at it. It's nice.
Yeah, so like the expanded time frames, of course, it looks pretty good and it's ready to kind of move. But I was just like looking at this on on an intraday perspective, and I'm like, so many gaps and fills and gaps and fills, and I'm like, what is this? Like, is this just one person trading against another person? Because that feels like it, right? He's like, oh, you
Yeah.
want to be long? I'm going to
Two identical bars,
Yeah.
almost identical,
It's
Daves.
I probably should
entirely
have been
identical.
paying attention more since you're talking about my stock pick that's convincingly trouncing your two jabronis.
I mean, I was just saying that when you zoom out, it's nice having a, like, kind of what I had said earlier. It's nice when there's a, like, an underlying pattern that you're looking at and kind of watching it form, because then you have a general thesis. Like, you can say, okay, longer term, or, whatever, I think that price is going higher.
Yeah.
If like this trend line breaks, well, then you delete the trend line and you put another line in place, or you have a support right here.
Yeah, you just move the
Yeah.
trend line.
The Nicholas Darvis's book talks a lot about these quadrants, basically, just creating boxes. Price moves out of this range, price expands, starts to move into this range.
Yeah.
If price doesn't hold this range, then it moves back into this quadrant, and then you're back into that range. It's just it's range bound action to range expansion to range bound action to expansion.
I subscribe to that.
So
Yeah.
that's how I try to look at charts, especially taking the the top down approach. Start with the monthly, weekly, down to the daily, and then
Yeah.
day trading, you're more or less at the mercy of the direction of the indices.
Yes, I
Yep.
agree. And that's one reason why when I'm day trading, I trade the most liquid stocks, right? Or ETFs. So it's either the Qs, the SPY, which are what the indices are, or then I go to Apple, which is, again, very close to what the indices are doing. And then my more higher beta would be NVDA and Tesla.
Sure. Yeah.
But you got to, I think the thing about my day trading, at least, is the longer I'm in the trade, the worse the worse trade it is. So if I get out of the trade,
on a day trade,
yeah, if I'm out of the trade and it captures 20-30%, I'm happy. Big deal. I'm happy. Often it goes higher after that. It tends to be the trades that I get in that in longer that don't perform as well as the ones I get out of quickly. And I guess I got to figure out how to capitalize off some of those big gainers as opposed to just taking the 20 or 30%. So I don't know. I don't know if you have any suggestion, Nick, there, or maybe I should just to trade longer term and not the day trade. But I'll tell you, I've done okay on the day trade. So I'm not knocking my 20 to 30% strategy. It's just getting annoying when I see I sold most of a winner out 20, 30%, and all of a sudden it's 80, 90%, right?
I mean, on top of just kind of looking at these ranges, I take the ABC patterns down to the daily, or down to the 10-minute as well. So, you got A, B, C, and then your D point was probably up here, but then you got another one, you got, another basically A, B, C, kind of a D point up here. You got an A point, a B point, price held. So C's down here, another D point right here. And you can measure these moves out. The price generally moves in a very symmetrical fashion. Like there's a big difference between referring to measured moves and using the word targets, like, because target implies that like price, like guaranteed, like a measured move is just kind of giving you it's based on
where it could potentially go.
Yeah, exactly.
Yeah.
So I think
target is going to get there.
Right.
And that makes sense. That totally makes sense. It's a nice distinction between the two. Yeah, because you're right. Target does mean that I'm expecting 300, but it only might get to 275 and the move fizzles, right?
Yeah,
100%.
Yeah.
I did much better with that last week. The only trade that I had that was the loser was the Friday trade. The other 4 trades, one each day. I did better of leaving some runners on. I always leave a couple contracts on to see what it does, and if it goes below what I sold my original lot at, then that's my stop, right? So I've captured if it's a 20% move, it's a 20% move. But last week I did really well holding a few more contracts, still with that same stop in mind, but giving them opportunity to run. And I captured a little bit more of, 50%er and 80%er. I think we had a couple 100%ers. Didn't hold on to it for the full 100%. They ended up being 45%, 50% trades. But at the same time, I felt better with that strategy of holding on to some runners and not letting, not closing out and seeing the whole thing run to 100%. You know what I mean?
Yeah. I don't trade options. I mean, I trade the stock. So if I'm day trading, I set a monetary stop loss on the day. I mean, I obviously do per trade as well, but I more or less set like a daily stop. So for instance, like let's just say it was $500. If I was down $500 at any given point in the day, I'd fucking call it quits and I'll come back at it the next day. I don't necessarily, how some guys talk about like, risking like 2% of their capital per trade or 1% or whatever that may be. That's on like a swing and position type basis, not on an intraday setup. Like I might risk 2% of my capital maybe that is my risk per day, but yeah,
I'm just full porting these options, baby.
Yeah.
Just full port, like all in. No, I'm not full porting them. I do have bigger positions sometimes than others, but that comes with the conviction of the trade.
Sure.
Hey,
yeah,
we're an hour in. You have anything else, Nick? You got anything else you want to show us?
No, I was just I just wanted to kind of share that idea behind gaps and how to kind of look at them, just to kind of save some guys getting chopped and whatnot. If they want to ping me on
any last words?
Not really. As you said earlier, it's okay to be cautious and not front run the stuff, but we're so far in 2023, seasonality has kind of come to fruition, and we're approaching a seasonally bullish time. So if you start seeing more bull activities, don't be like, oh, contrarian, I'm gonna short. You can just take a look at September. It was seasonally bearish, and that was a disgusting month, right? For so many. So just keep your wits about you. I think seasonality should play out the same way. And you're starting to get into tax season as well, which means the losers will continue to be losers as people sell down their positions and readjust their portfolios for next year. So just keep a track of that as well.
Don't be buying Disney and Target down here.
No.
Yep. Wait till December, right? Like those, if they're gonna turn, it'll be after the year. Like look at best example I can give you for this year is look at Carvana, right? Carvana was getting beat, and then the year turned, and isn't it up like 800% for the year?
Yeah, it's up something just stupid.
Yeah. So similar, Carvana was getting beat the hell out all of last year, finished out most of the year to the downside, and once the year flipped, it just kind of took off. So you got to see these names like Disney, for example. If you're starting to see accumulation,
it was up almost 1,300% at its high. It's up 850% now.
Yeah, which I think that's just an indication of how kind of market structure works. Right?
That looks like Batman.
But that's just conversations around market structure, which is the losers get sold into the end of the year, And then you should start to see accumulation, but price not really getting better towards like between October and December. So that's something to watch for in the names that have gotten destroyed. And then you can go long going into the following year. But most likely losers will remain losers into the end of the year.
All right, guys. Thank you for another enthralling conversation. I was glad I could troll you on the bear side for a little while and have you stringing along for about a half hour. That was really fun. I'll have to do it again sometime.
Closer to 0 than 400. Gosh, at
Waka waka waka.
least makes sense.
That did make sense. That means it was going below 200.
Yes, but that's why I said at least makes sense.
It's not going to do that. But guys, thanks. GP, thanks. You and your lovely bride be safe on your travels.
Appreciate
Make it
it.
home safe. And guys, you don't have to be a hero and trade every day. You don't have to trade everything you see. So yeah, there you go. Have a good one. You guys take it easy. Thanks for being here. Always hit that like, follow, subscribe. We appreciate when you do that. And we will see you in the open market tomorrow, and we'll be back next Monday at the same time, 8 p.m.